Welcome back to the Tech Talks Daily Podcast. I'm your host, Neil C. Hughes, and today I've got a special treat for all of you who have been keeping an eye on the consumer finance industry. Because the industry's growth in recent years has been nothing short of impressive. But just like any burgeoning sector, it has its challenges, primarily in the tech department. And this is where today's guest comes in. He's from a company called DivideBuy, which is a company that's reshaping the consumer finance landscape with their cutting-edge technology. So today, Ian Barrell, their partnerships and business development manager, is going to join us on the podcast to discuss how they've not only just built their platform from scratch, but also introduced the intriguing concept of installments as a service. Now, their dedication to responsibility and ethical behaviour, combined with their use of tech, is nothing short of inspiring. And with their recent acquisition by Zopa setting off my tech spidey senses, I wanted to learn more about how they're taking their innovation to new heights. And especially when I did a bit of research and discovered that Ian is from where I was raised, in Derby here in the UK. I'm more excited than usual to get him on the podcast, so buckle up and hold on tight as I beam your ears all the way to Derby here in the UK, where today's guest is waiting to join us. So a massive warm welcome to the show. Can you tell everyone listening a little about who you are and what you do?
Hi Neil, yeah, my name's Ian Barrell and I work for DivideBuy. We're part of Zopa Bank, and the DivideBuy part of the business does retail finance. So we provide interest-free credit and interest-bearing loans to consumers via retailers. Prior to that, I've worked in various fintechs, credit reference agencies and financial services institutions, probably for longer than I can remember. But yeah, that's me.
Excellent. Well, it's a pleasure to have you on the podcast today. A lot to talk about as well. And this is an incredibly crowded market. So can you offer an overview of what DivideBuy is, what makes it different, what problems you solve with tech, and ultimately what initially sparked that idea for installments as a service too?
Well, as I just said, we do consumer finance. We were set up in 2015, I think primarily as a fintech. So if you look at the concept of loans and credit cards, there's certainly consumer loans, interest-free credit. There's not much you can do with that. Ultimately, it is what it says on the tin. You lend some money to a consumer, they pay it back to you over time. And I think in terms of what DivideBuy is and where we've made a difference is around the tech. And what certainly helps is the fact that we're quite a young company. As I previously mentioned, I've worked for businesses in the past and worked with businesses whereby they have legacy systems, so systems that have been in place since the 80s, the 90s, the 2000s, you name it. And this thing called the internet came along, and then online shopping, and suddenly they had to put some kind of digital platform over the top of that. So that, I think, is where a lot of lenders have struggled, I guess, with the provision of finance. Whereas, as I say, when you start from 2015 with the good tech stack, you can start from that position. You can integrate with e-commerce platforms very easily. You can communicate very easily via APIs into other retailers and other lenders. So that kind of gives you a big advantage. And I think that's where the installments as a service name tag comes from, and I think we'll probably touch on that later in terms of exactly what we mean by that.
And I'm glad you mentioned tech stack there, because the consumer finance industry has seen substantial growth over the years, but many argue, in fact many of the customers might argue, that the technological support hasn't kept pace with many other industries, and those industries are providing experiences that we now expect everywhere. So in what way does DivideBuy bridge that gap and bring innovation into the sector?
Well, I think it's like just to build on the last point, really. I think if you looked 10, 15 years ago, it would not have been out of place to go into a shop, for example, and decide that you wanted to buy something on finance, and you might have to fill out a carbon paper form, if you remember those.
Yeah.
So you're taking a while to fill out that form. You're still at the till, which is annoying everybody else in the queue. At that point, then the person on the other side of the till rings through that application, and they may well get a decision at some point in the next 5 to 10 minutes. So from that perspective, that's not an ideal journey, and that's not the best use of technology in that kind of environment. So it isn't just DivideBuy, but many companies have started to bridge this gap in terms of providing, certainly in the online world, but more and more so in the face-to-face environment, a digital way of making applications, using short-form applications, using stuff like QR codes to pre-fill certain information, and really providing a much more consumer-friendly service within the finance sector, which is kind of taking it away from that sat in front of the bank manager and sat in front of or doing an application in front of other people. So, for example, if I look at what we do at DivideBuy, in that kind of environment, we would actually send a link to the consumer on their phone, and they could fill in a very short application form, 7 to 9 pieces of information, and get a decision there and then in store, which of course is a much sort of further removed scenario to the one I highlighted earlier, where you're filling out a form. So I guess that's the way things have evolved and where they're going.
And of course, we're right in the middle at the moment of an economic downturn, high interest rates, high inflation. And one of the things that stood out for me was that you take responsibility and ethical behaviour and put them at the core of DivideBuy's product development there and the tech that you use. So can you expand on that ethos and how it translates into your services, your tools, and ultimately ensuring that welfare of your customers? 'Cause it's a big responsibility, isn't it?
Absolutely, yeah, absolutely. We're making a decision on whether we want to lend somebody some money, and we need to make sure that decision's correct and that it's fair. And I suppose the first thing to explain there is a fair decision doesn't always mean it's a yes decision. No might be the best answer for some people in some scenarios, and certainly back in the day, I've sat in on various customer service scenarios where that was definitely the right decision to make. So ultimately, it's about making the right decision. So from a DivideBuy perspective, we always use external data, so information from credit reference agencies, which isn't just things like loans and credit cards. It's expanding now, so it's including things like council tax payments, rent repayments, utility bills, that kind of thing. So we get a view of the consumer before we make a decision. So that's, I guess, upfront, what happens with the consumer. Do we want to take them on board or not? I'm pleased to say in the vast majority of cases we do. So we will typically accept around 80% of all people that apply from our core sectors. But then obviously it's about treating them fairly and ethically as and when they're a customer, should I say. So I think probably the best example of how we approach that at DivideBuy is we do not charge fees. So what I mean by that is your typical late fee, if you miss a payment, is probably a good example. Yeah. So if you think about it logically, if somebody has not paid an instalment on their loan for some reason, there's probably one of two reasons for that. They can't pay it because they've run into some problems. So maybe they've lost their job, maybe there's been a bereavement, maybe something else has happened in their life. Life happens over and above repaying loans. So ultimately at that point, perhaps they've missed a payment. Alternatively, they might have decided, you know what? I've just decided I'm not going to pay that loan back. So DivideBuy, thank you very much, but I'm not going to pay you back, and I'm not going to take your calls. So if you think about it in either scenario, if somebody's run into problems and they can't pay us, that's not their fault. And if we've lent to somebody and they've decided they don't want to pay us, that's actually our fault. In both scenarios, charging a fee doesn't help the situation whatsoever. So I guess looking at it, the concept of fees is something that's been ingrained in financial services probably since the year dot. It's not something that we do because we don't see any benefit from it. And more than anything, I think it is a broken business model. So there's certain sectors that you can probably look at from the last couple of decades that have, within financial services, that have charged fees, and more to the point, they've had a business model that's relied on them having fees in place. So bizarrely, they've got a business model where they need people not to pay them back, and that just doesn't seem logical to me. Hence, we've taken the position we've taken.
Love that. And of course, traditional lending has always consisted of things like credit cards, loans, etc. So for anyone listening, and we do have people listening all over the world, for anyone listening that is new to this installments as a service concept, can you just give a brief overview of it and how it differs from traditional lending models, and also how other businesses can benefit from integrating it into their platforms using your tech?
Absolutely, yes. So I think, as you touched upon, certainly not credit cards, but loans. The concept of a loan is you borrow some money and you pay it back over time, and you're paying back over installments. So we will set something up with the consumer. If it's, interest-free credit, let's make the maths easy, of £120, they pay us back over 12 months, they'll pay us back £10 a month. And at the end of that process, everything's good, we've got our money back, they've been enjoying their products for the last 12 months, and we part ways. But the platform that we've provided there is the concept that we can make a decision on loaning something to, or making a loan to somebody, or allowing them to buy a mattress from Emma or Simba or whoever on our interest-free credit, and then at the end of it, everybody's happy. But the platform itself still exists and can do other things. So, for example, once you've got that installments concept in place, you can use it for rental. So, again, we've worked with other companies where we provide a rental solution for tech products, which again has, I think, a huge amount of green credentials to it. So people who will want to have the latest laptop will lease it over, say, 2 years, and then at the end of it, they can choose to return it to the electronics company, or they can choose to take out a newer model, and then that initial laptop gets recycled and somebody else gets the benefit of it. And that could happen perhaps 3, maybe 4 times. So from that perspective, that's where I think the installments as a service solution comes into its own, in that we can expand what we're doing into sort of different areas and different types of ownership. And actually at the weekend, I saw an advert for Volvo offering a subscription car service, which is new to me. Sounds very much like what we're doing with tech.
Yeah.
But yeah, you read into it and it's like, yeah, you pay a monthly fee and you get the benefit of a car. You can upgrade, downgrade at some point in the future, and everything else is covered. So that is where I think the concept of installments as a service comes, and that's where our platform has been built, and that's what it sort of provides.
And before you came on the podcast today, I was doing a little research on DivideBuy, and I also read that you were recently acquired by Zopa. So can you tell me a little bit more about that partnership, how it will influence the future direction of DivideBuy, especially with your vision of bringing BNPL 2.0 to consumers? How does it all fit in?
How's it all fit in? Good question. So yeah, I think first and foremost, the concept of being acquired by an established, well-known bank brings with it huge benefits in terms of our ability to scale both our lending capabilities and our technological innovation more quickly. We're barely 4 months into the relationship, and the transformation's been immense. We've brought significant new regulated products to market in the last couple of weeks, which, if I'm honest, we've kind of been going out for a while now. But Zopa has certainly turbocharged our ability to bring that to market, not just in terms of more bodies, if you like, on the ground, but just bringing in our whole business strengthening aspect to things which you get with bigger organizations, and that's the difference, isn't it, between like big organizations and the small and nimble ones. The key is to find the benefits of both and bring them both to bear. And I think finally, certainly in terms of the Zopa stuff and what's going on with the market in finance in general, as you've pointed out, cost of living crisis, et cetera, what went on with interest rates at the back end of last year, and we've seen ever since. Certainly, there's kind of slight echoes of 2008 and the financial crash there around. You've got a lot of lenders in the market that are perhaps looking at repositioning. We've seen some very big names pull out of the sector this year. We're certainly seeing others reprice based on what's going on with interest rates. So I think what we've also seen from the acquisition by Zopa is a lot of goodwill in the marketplace, and certainly retailers are suddenly saying, oh, hold on a minute, we've actually got somebody that's running towards the market, offering products and offering tech that we like, where others are looking at it and thinking, is this core to us? Is this what we want to be doing? So that's certainly been, I think, a lot of the feedback that we've seen generally. And as regards Buy Now, Pay Later 2.0, I had to look that up, if I'm honest, because I'm kind of like, what's that mean? It's like, I think we're talking Web's 3.0 and all that kind of stuff. And it's like, well, actually, I think we're doing it already. I think in some respects, what it's actually getting at is the concept that there's a lot of lenders that have come out in the last 10 years that will do low value lending, perhaps over 3 months, that kind of thing, which has been the Buy Now, Pay Later boom that the press talk about, although to somebody that's been around for longer than they care to mention, ultimately, Buy Now, Pay Later has always been there in one way, shape or form. But there's certainly been a boom in it, certainly in the online sector over the last 10 years. And I think what we're talking about when we talk about Buy Now, Pay Later 2.0 is the concept of bringing some more structure and rigidity to it in terms of regulation. But also, as I touched upon earlier, making sure we make the right decisions using credit reference data, using affordability calculations to make sure that the people we're lending to are the right people and people that can afford to pay us back. Because, you know, it doesn't do anybody any good if we make bad lending decisions.
We've talked about those bad lending decisions and the cost of living crisis. And one of the features that you emphasise is running credit checks, affordability assessments to all your customers. So I'm curious, how do you ensure this process remains efficient, transparent and fair for your consumers seeking those instant credit decisions? I would imagine under the hood there's a lot of tech and a lot of APIs going on there, but is there anything you could share around there?
No, absolutely, yeah. So I think just let's take those one at a time. So efficiency. So people expect immediate decisions these days. So certainly if you're in the online world, if you fill out a form, you press apply, you expect to see a decision. And that's what we give people, certainly within 2 to 3 seconds. We will respond with a yes or a no decision in terms of lending. What we don't tend to do is what's classically called referrals, which is where you ask for lots more information to get to the end of a decision. Ultimately, this is all about slickness of customer journey. This is about, you know, providing retailers and consumers with swift outcomes. So we don't necessarily think that referrals particularly lends itself well to that. So from an efficiency perspective, as you say, within that 2 to 3 seconds, we will be going from the retailer's website. It will come through ourselves, off to the credit reference agency. We will pull back upwards of 1,000 plus fields, which we will then put into our credit decisioning engine. That makes a decision. That's returned to the retailer and subsequently to the consumer, all in that 2 to 3 seconds. So, a lot of APIs going on, a lot of data, a lot of number crunching. But I guess that kind of brings us on from efficiency to fair. So the concept of fair is what I touched upon earlier. You know, if we're making decisions with no information, then that becomes very subjective and perhaps very limited based on what information a consumer has given us. By going out to a credit reference agency or maybe 2 credit reference agencies, we're pulling back a whole raft of information around that individual. It's not the Big Brother state that everybody talks about. It's actually it is actually a situation that allows people to enjoy the benefits of credit. If there's data and if these institutions didn't exist, then probably you'd find most loans and credit cards wouldn't exist. So in terms of fair decisions, that's exactly what we're doing by pulling back that information, understanding a consumer, and then making a decision. We can absolutely show that what we're doing is fair. And as I said earlier, you know, saying yes is maybe not always the right and fair decision. So it's about what's right for the consumer. I think in terms of the technology side of it and how we try to make things transparent for the consumer is we have something called soft search. So that effectively, and some of your listeners will be aware of what it is, but that's effectively the ability to do that check with the credit reference agency before they go into the full loan application. So, for example, you might be on a retailer's website and you'll see that DivideBuy offers finance there, and you might be looking at a particular product. It might be a sofa, it might be a bed, it might be a mattress, it might be, I won't say anything, but something like that. And basically, you'll see something there'll be a little tab next to that particular product, and it will give you the opportunity to find out if you're eligible. So it's an eligibility check. You put in a few details, name, address, date of birth. Again, that whole process of going off to the credit reference agency happens. We make a credit decision based on on that data, and that consumer knows there and then, before they even get to the till, I'd actually be accepted for credit. So again, what this helps, it helps in any way, shape or form for the retailer, and it stops what I call bad customer journeys. So people who decide they want to buy something, get to the end of the process, make an application, and are subsequently declined. That's not a great outcome for anybody. So if we can provide that information up front, we're being very transparent in what's going to happen if they decide to apply for credit. And we marketing guys will look at this, and they will show that it's a huge benefit in terms of that slick customer journey that all our retailers are looking for.
So for any business leader listening anywhere in the world, for those businesses and merchants who might be interested in integrating with DivideBuy solutions, what kind of value propositions do you offer them, and how's it in turn enhance the shopping experience for their end customers? Anything you can share around that, just to bring it to life?
Yeah, I think the last point is exactly it's about creating a slick customer journey, one with as little friction as possible. What you'll find is, certainly for the bigger retailers out there, yes, there is a cost involved in providing credit, believe it or not, and that's how we make our money. And at the end of the day, sometimes there will be pricing discussions with retailers, but all of our big retailers, and certainly in my experience, all of the discussions I've had with prospective retailers, price is never the issue. It's always something else. It's always about customer experience, or the application journey, or the fact that a decision might take, half an hour to come through. In fact, I had that experience yesterday, believe it or not. I started to treat myself to a new phone, and I went through a, for the sake of it, a finance application. Yeah. And it was actually half an hour to get the decision. Now I understand why that happened, and I understand the reasoning behind it. But for people who don't, that's probably not a great customer journey. But yeah, getting back to the point in terms of what we do, this is about, as I say, it's about providing tools that not all finance companies provide, because first and foremost, to be fair to them, they were set up as banks and they lend money. I think we were set up as a fintech who also tends to lend money. So it's the fintech thing first. So this is about customer journey. It's about putting things like the soft search in place. It's about having a streamlined application form that means that a consumer only has to fill in 6, 7, 8 pieces of information depending on their circumstances on one page. That's scrollable. That's mobile optimized, which is, for people who are listening to this from a tech background, go, well, yeah, that's a given, surely. Well, actually, it's not. In this scenario, it never fails to surprise me. Actually, when I'll talk to retailers and I'll say, well, we don't actually get that at the moment, I'll be like, wow, yeah. But ultimately, this is all around, as I say, the fintech aspect of it, getting more people through the checkout and getting through that checkout process quickly. Hopefully, that answers your question.
100%, man. And I appreciate you're probably locked down to various embargoes and NDAs, especially if competitors are listening. But if we do look ahead, is there anything you can share around what innovations or developments we can anticipate from DivideBuy in the future, especially with the changing landscape of consumer finance? How do you see the role of technology as well, further reshaping this space?
I think it will hark back to what I touched on earlier around the installments as a service tag, and the concept of getting into subscription services, rental services. We don't see a huge amount of that at the moment, but I think that will grow massively. So again, we've built a platform that can service that. So I just see more and more conversations happening with with manufacturers, for example, your Microsofts of this world, the tech ones are easy to pick out, HP, Samsung, the concept of renting a product for 2 years, returning it, using our platform to do it. It just feels to me like that's the natural progression for this kind of technology that we've built and this kind of solution.
Well, it's been a huge pleasure having you on the podcast today. We've talked about so much, and it is a very heavy and serious subject, so I'm going to try and have a little bit of fun with you before I let you go. We've got a Spotify playlist, and we've got an Amazon wish list. So I always ask my guests if there's anything they'd like to add. So all I'm going to ask is, what would you like to leave us with today, and why?
So Spotify playlist. So I did look at the Spotify list, and there's quite a bit of eclectic stuff on there. So I hopefully think I'll be in good company. What to pick? I think about this quite a bit, and ultimately I would kick myself if I didn't go with the greatest band that ever lived and ever will, and that is a band called New Model Army, who 99% of your listeners will never have heard of, which is going to be a learning experience for them, but I'd like to think for the better. So I will pick a song that's quite a nice entry-level song for people to listen to, which is a song called Poison Street. As I say, the band is New Model Army. They've been with me for 30 plus years, and whatever I've gone through personally or professionally, they've always been there as a prop to take me through things. So leave you with that, I guess.
Fantastic choice. And we must be of a similar age, because I was raised on those in the 80s as well. And
well, there you go, you see.
51st State, some great tunes there.
Exactly. So yeah, we are clearly of an age. You're in the 1% that will say, oh yeah, I heard them in the 80s. Yeah, are they still going? And the answer is yes. So yeah.
Yeah, no, great band. Very underrated as well. I'll get that straight added to the Spotify playlist. And for anyone listening, just wanting to find out more information about Divide By, anything we talked about today, contact your team, etc. Where's the best starting point for everything?
Well, I guess start with the website, ultimately, which is www.divideby.co.uk. There's any number of ways to contact us, but I think you can ask for a demo within the contacts section there, and that will find its way through to either myself or one of my colleagues, and we'll be back to you as soon as.
Well, I think the consumer finance industry has exploded over the last few years, but the tech support in this growth has been lagging behind, and that's one of the reasons I invited you on today. And it was great hearing more about how at DivideBuy you are bringing technology solutions into this space and built your own platform from the ground up. Just feel you're ideally placed to combat this task at the moment. But more than anything, just thank you for coming on here and explaining it in a language that we can all understand. I think it'd be really helpful for both businesses and consumers alike. But thanks for sharing it with me today and leaving us with a great song too.
No worries, and thanks for the opportunity. All right, thanks, Neil.
So a huge thank you to Ian for coming on today and talking about everything from the significance of responsible lending to the benefits of installments as a service, the tech that makes it all possible, their game-changing partnership with Zopa. I think we put all that in one melting pot. It's evident that the future of consumer finance is both dynamic and customer-centric. So thanks, Ian, for sharing his insights and giving us a sneak peek into what's next for DivideBuy too. And for everybody listening, check out what they're doing, and even more importantly, get on that Spotify playlist and introduce yourself to New Model Army's Poison Street. What a great tune, recommended by Ian. But that's it for today. So I'll be back again tomorrow with more tech insights and industry talks right here on Tech Talks Daily. Connect with me on LinkedIn at Neil C. Hughes. If you want to work with me, my website is techblogwriter.co.uk. But until then, keep innovating, stay curious, and until next time, don't be a stranger.